Now for a slightly, perhaps a little different perspective, Mr. James Roberts.
Thank you. It's great to be with you this morning. Thanks for the opportunity. I wrote a paper last fall at Heritage, and I said, really, if you look at the G8 and the G20 over their whole history, their attempts to solve the world's economic and political problems have lately become really a waste of time. Far from providing remedies for ailing economies, the summit standard prescriptions for generally ever more government intervention and regulation along the lines of European welfare state models are only impeding economic recovery. And they issue tepid statements on world geopolitical problems that have actually made the world a more dangerous place. My bottom line prescriptions up front, I think instead of pursuing antiquated and dysfunctional G20 formats in order to remain economically and militarily strong, I'm speaking about the United States right now, which is our main focus at Heritage. So we need to continue to be the invaluable force for good in the world that we have been for 100 years. We have to fix our own policies, and that means we have to confront the federal budget deficit, end interest rate subsidies, expand trade, and reduce government regulation, especially taxes. And so instead of pursuing the G process model, we should create what we call a Global Freedom Coalition and a Global Economic Freedom Forum, as our Vice President Kim Holmes has argued in papers we've done under the rubric of American leadership. And as a diplomat, I played a small role in the old G7 process, and I admit it helped to coordinate the end of the Cold War. I think it was useful. And we had at the OECD, sorry, how to get rid of that. At the OECD, we had the ministerial every year in the run-up to the G7. And, you know, it was useful in that context, but since then, the world problems have become such that they cannot be confronted in that way. And all of that hinged on a very strong U.S. leadership in any case. You could just take the keyboard down. Yeah.
Sorry.
Yeah. You know, the attempt to add Russia, to make it a G8, has failed. It's pretty clear right now that under the Putin and KGB dictatorship that the dreams of President Clinton in the 90s that they would become a market-based democracy in Russia have not panned out. The UN model has failed. So really, we're just looking at a group of self-interested international bureaucrats, and we know that through public choice theory that we look at Heritage that they just end up arguing for more government and more taxes, as we've seen with this global tax proposal. You know, the world, obviously, we confront these gigantic and increasingly ungovernable megacities, and that's the source of much instability in the world now. And so how can we, in a coordinated way, attack those problems, which are the source of a lot of the issues that we're really dealing with, in addition to the unsustainable social welfare spending in Europe and the United States. Specifically about international financial institutions, Secretary Geithner in the last couple of months has supported new Basel Committee rules on capital and liquidity, which we support. But the idea of a universal banking levy, internationally determined but nationally applied, we don't think is sustainable. Steve Forbes recently wrote that the financial reform bill in the U.S. Senate right now, which is really the kind of the model that the G20 would look at, it doesn't address the causes of the recent economic crisis, overly loose monetary policy, as the professor said, the morally hazardous behavior of Fannie Mae and Freddie Mac in guaranteeing trillions of dollars in junk mortgages, and the failure to properly regulate credit default swaps and other derivatives. And I would just refer you to there have been a number of articles written, but a recent one by John Taylor in the Wall Street Journal, I think, is really worth looking at. And it talks about, you know, the bailout of Bear Stearns is really creating a false sense of security and leading to, the Lehman collapse. And that's what we're worried about now. We have this EU TARP, which is essentially what's been announced overnight, which is just going to kick the problem down the road, further indebt future generations of Europeans as the TARP indebted people in the United States. And as Rubini has said, this is a socializing of private debt. It's not sustainable. It's morally hazardous. The order by liquidation section of the Dodd bill that Professor Taylor talks about, to try to institutionalize that by giving government more discretionary power that they would use as they did in choosing between Bear Stearns and Lehman, that doesn't augur well for the future either, we don't think. Professor Taylor argues for a bankruptcy, special financial bankruptcy court, what he calls Chapter 11F, and a group of special masters to try to take down these too big to fail institutions instead of continuing to subsidize them with taxpayer-funded deficits. And if you can regulate orange juice future derivatives, I think you should try to take on regulation of these credit default swaps, which were built, of course, on this foundation of taxpayer-guaranteed Fannie Mae and Freddie Mac mortgages in the first instance, and now have grown to $600 trillion. And some portion of those CDSs are useful for the economy, but since they're so non-transparent and there's no agency, looking at them, and attempts to regulate them have been beaten back, basically on both parties by the big banks. That's something that really needs to be addressed and something we can talk about. In terms of a global bank tax, well, who would collect it? What entity would collect it? With the IMF, we don't think so. We don't think it has the capability. They've been arguing for that for a long time. What sorts of transactions would be taxed? Would the EU and the United States agree on the nature of the transactions that would be taxed? If they an FDIC model, as Taylor points out, if that were funded with this $50 billion by this tax, again, you have the problem of the moral hazard and the discretionary decisions on who gets bailed out and who doesn't. We think, in general, of course, a tax at this point in a recession, and a global recession, is going to further hobble the recovery. And we're concerned about the possibility of protectionism in an EU-applied tax that would put U.S. and Canadian and other firms at a disadvantage in Europe. Just a little bit about the G-20 agenda with regard to China. My colleague Derek Scissors at Heritage has written some fairly provocative things about China, and just to review a few points. Is China really going to dislodge the United States in the next few years from the #1 global engine of growth? He raises some questions because of the aging population. There's going to be another demographic bomb coming up. In 2035, 280 million people in China will be 65 or older. Far fewer people will be working to support them, as is the case in Japan, and will be the United States too. China is not contributing generally to GDP growth in the rest of the world because of the export model. It's pursuing a mercantilist model. So the United States still has quite a few advantages over China, and he takes issue with China, the popular conception of China being America's banker. After all, China really doesn't have any other place to put their money, so because of their non-convertibility. Their purchase of U.S. Treasuries has been an enabler, I agree with Professor Eigengreen, but it is also not as important as it's been perceived in foreign policy circles. So in terms of using the BRIC model or the China model to convince the American people to cede economic policymaking sovereignty to the G20, we take issue with that. And we could probably get into more of that during questions, but I'll just stop there. Thank you.
Thank you very much. Well, let me just remind everybody, there's two aspects that we're looking at today. One, obviously, as the Korea Economic Institute, we're fascinated by the fact that Korea is the chair. We'll be hosting the summit in November this year.